Very interesting gap just got filled. It's not the gap that we would like to be filled, but it had to be filled. Bit of a drop to the downside today, ladies and gentlemen. Well. Do you want my honest opinion? Bitcoin's going to come crashing down and it's going to equally reverse back up. The moves to the downside are happening way too fast. We're getting gauges saying that everyone's really fearful. This is where you buy the blood. But there has to be a game plan. It's all going to be on Nvidia, ladies and gentlemen. That's the fact. One stock is going to save it all. This is a time now where you need to be focusing on Bitcoin's price because the reversal will be pretty sweet, but it may be for a short period of time. That's the problem we've got. Is this the dip to the 100K mark? Sorry, the dip to the all-time high? Come on. You think we need a swan? Nah, this is a gray swan. It's sort of like a black swan, but it's being washed down. Right? Do you understand that we've had a US government shutdown? We're lacking data. Right? We don't know what the jobs market's been like in September. We don't know what it's going to be like in October. We're getting September's data only. So we don't have the full picture. This is why I'm saying that Nvidia is the only thing that's going to be the saving grace for the markets. Besides the fact that Donald Trump has just said on troops in Venezuela, I don't rule out anything regarding Venezuela. We just have to take care of the issue. Really? So, with that being said, nah, this is cooked. People just don't know it. We are in... All right, I'm just going to break it all down for you, ladies and gentlemen. Try and keep this live shorter than what this morning's live was, but it was obviously one from the weekend, okay? So just sit tight. Let me break it all down for you, ladies and gentlemen. Mad love and respect. Happy birthday to anyone whose birthday it is. And people can't accept reality, Tino. The markets have been stretched. They need to go down right now and for the next few months. You may be right. The stock market in terms of valuations is so high, right? You've got interest rates that are being, well, we don't know if we're going to get them or not. The market has priced in the idea that we should be getting 50 basis point cuts, and that was the first time when they announced that they were going to cut the rates. The market priced it in, everything goes up. Nvidia and all these business deals that are coming into play with AI has sent the stock market higher and the prospect of future earnings from these companies. Google is the only one that's absolutely smashed it, in my opinion. It's done really well on its earnings. Microsoft did okay-ish. Meta didn't really see success because it's had to borrow money at high rates. But Nvidia, word on the street is it's going to beat its estimates. The likely scenario for Bitcoin to make a reversal in these levels that we've got right now is on the basis that Nvidia beats its estimates. And on top of that, the data that comes out the day after shows a cooling labor market. Check this out. It says here that Nvidia's report on Wednesday will be picked over investors' uneasiness over the stratospheric AI valuations. Even though the chip maker is widely expected to deliver another earnings beat, options traders are pricing in a 6.5% swing in either direction. Let me show you what that looks like, ladies and gents. Right? Let's make the assumption that Nvidia doesn't do anything for the next couple of days, which it probably won't, in my opinion. Okay? 6.5% move to the upside would take Nvidia to roughly around, it would bring us back up to roughly 196, just the $200 mark. Okay, so it'll give back all of what happened last week, near enough. Okay, equally, if it were to drop down, it would be going into the $172 region. That is still fine. Sorry, because that is in exactly the same consolidation area that they have been. And that was with earnings as well at that time. All right. So you've got to really say to yourself, do we really have anything to worry about if Nvidia does beat? If Nvidia does beat, then what you're witnessing on the stock market is classic potential reversal environment. It's testing key moving averages. You go and have a look at the stock market. Oh, this is an interesting thing. American Bitcoin. There's been a big purchase on this bad boy. Bitcoin mining company provides carbon neutral Bitcoin mining and digital assets operations. And UBS has just picked up 41,171 shares in the company. I actually think that the majority of Wall Street is going to start tapping into the companies that have everything and anything to do with Bitcoin mining. Not trading, mining. Look at Cypher mining. Who got into bed with that? Google. Now you got the biggest bank, Switzerland, okay? UBS, huge. Largest bank in Switzerland has just picked up some shares in this little company. Why? Why? What's going on in this company here? Here we go. Statistically, you've got management holding 15% of the shares. That's wonderful. The more shares that the management holds, the higher the price is going to go when there is a demand for those shares. Okay? But that does imply that there could be insider trading that could be offloading those shares, but that's another story. All right? You've got 18 funds picking it up. All right? Now, if we look at the overall story, it doesn't look like a stock that's got the greatest fundamentals. But with UBS picking up some shares, that is a very interesting thing, given that this company statistically is dead. It is. It's horrible. Look at it. It's all this selling. All of a sudden, we've just seen this big move on earnings per share. The latest earnings per share reading came in at 200% plus. Going into the quarterly earnings, you can see down here that we had 453% earnings on sales, and earnings came in 200%. Okay, so there's a reason. Something's brewing in this company. Keep an eye out on it, ladies and gentlemen. If you didn't need any backing on it, these guys have just bought a load of shares in it. Why? Now, looking at the data, it's not giving me a reason to it, but who knows? We don't know what they're doing. Those of you that are going to do a deep dive in it, go and do a deep dive in it. But there's a reason why they've invested in that. Maybe it's because they want exposure in crypto. Maybe. But at $5 a share, come on, man. Just out of principle, right? You just buy some just for the sake of buying it. Now, stock market. Quite frankly, ladies and gentlemen, the NASDAQ has to stay within this range, okay? If we lose this range, we've got a problem. Simple, all right? It's healthy to have a pullback. Going into the volume on the NASDAQ right now, we just go over to it. NASDAQ Composite Index showing us that volume is down. Well, it's up. Well, when I say it's down as in like it's been aggressively selling at minus 12%. Okay, it's in a distribution day of 1.28% negative. That means we have now got 7 days on distribution on the NASDAQ. So sorry, 5 days distribution on the NASDAQ and 7 days distribution on the S&P 500. This is going to change here in terms of exposure. And they're going to say to you, maybe commit to around 20 to 30% maybe, or 30 to 50% of your exposure, okay? Because you've got a big event coming, which is the earnings of Nvidia, and they're expected to beat, okay? Quite frankly, if NASDAQ does lose this range of 24,397, okay, and Nvidia does not beat, you are in full-scale bear market, ladies and gentlemen, and I would be expecting NASDAQ to come back down to these levels over here on the 25 region, the 23,000, 22,700 zone. That is exactly where I'd expect NASDAQ to go, because that would be a very healthy corrective move in the market. 200 EMA test, that is what I'd expect. Your Bitcoin would, of course, end up sailing all the way down towards this 75,000 region. It could even go beyond that. It could even go beyond that at the 69 zone. It could even clear that range, ladies and gentlemen. Look at how much time they are spending moving price down. They spent more time moving it up, but now they are spending less time moving it down. That's the problem we have got. Doesn't help that BlackRock's been offloading Bitcoin shares of the ETF. It's not helping, okay? But the only thing that can save Bitcoin is Nvidia. And whether you like to admit it or not, it's true. I'm sorry, it's true. It's got more market cap than Bitcoin. What you think the idea of Bitcoin is going to save Bitcoin? If that was the case, Bitcoin should not be down today, and it should be shooting all the way to around $300,000 because the idea of fear is in the bin, right? The US debt has been sailing up. Inflation's been climbing higher. Your dollar purchasing power is in the bin. So why is Bitcoin going down? This is just clean ass consolidation. They're getting rid of it, but there are participants buying it. So don't get it twisted. The only thing to save it, in my opinion, is Nvidia, because that's optimism. If Nvidia does well, and the stock market will be like, we don't care, Nvidia are going to keep smashing it, that is going to force the NASDAQ to move back up. That's going to then force money to go back into shares. It's going to force it all to go back into tech, okay? Then you've got the story of interest rates. Yeah, the story of interest rates. That's going to be a bit of a problem. Looking at the bets today, see if they've updated. 55.1, so it's come down a little bit from 55.7, if I'm correct, from earlier on in the live stream. It's not looking good there, all right? Quickly going over into other assets. Solana, breaking down, daily time frame. Come back into the green vector candle recovery. Last area of support would be $95. $100, in my opinion, might be a steal with Solana. Might be a steal, okay? They need to maintain those levels at 193 itself and $94. Going into Ethereum, she's doing well, to be frank. She's doing very well, but she's got vector recoveries that could take her easily straight back down to $2,500. Those vectors right there are a problem for me. And I think that they would spend the next few days going into that. Then if the data works out well, happy days, and we get the idea of rate cuts, then we're good. But if we do not get the idea of rate cuts and Nvidia do not deliver the earnings that the market wants to justify stepping back in now, you are in a very interesting pullback. That's when discount becomes pound shop. It gets to a point where the discount should technically just end up becoming free. It's cheap enough. You may as well make it free. That's where you've got the sale. That's where you have your fire sale, ladies and gentlemen. Okay? Other metrics to consider. The Coinbase Premium Index is telling investors around the world that everyone is selling Bitcoin. Cool. That's when we pay attention. When the weak hands sell the Bitcoin, we want to pay attention to those guys. Why? Because it's going to tell us who the guys are buying it from. Those are the guys that are buying it from the weak hands. Okay? So you can see that we've got a little bit of a low here. All right? So the Coinbase Premium Index is prone, or should I say due for reversal. Okay? Even though it's been going down, we are expecting it to start returning back up. Okay, because the idea of the market dropping down so aggressively, everyone is getting shaken out. Look at the bids. Look at what is going on. They are buying up the Bitcoin. Okay, they are picking it all up. What are these transactions? Okay, you've got 27 million going into a Coinbase wallet. Then you've got 36 million coming from Coinbase wallet to an unknown wallet. All right, so you've got some maneuverability and what have you. But let's just be honest now. It's nothing to be worried about. I'm being frank with you. It's nothing. Because if we actually just look at where we are overall, going into the volatility index itself, we are spiking up to vector recovery zones that I said that we are more than likely going to be seeing, okay? The real problem is if we do see the vectors all the way up here get recovered. If we do get a reading of 30 on the stock market, all right, sorry, on the volatility index, I promise you that is when I will do a live stream that says the word buy every single flipping second. Buy, 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 buy. That's all I will do. I will just say, keep buying. Tina, should I buy toilet paper? Buy it. Should I buy flour? Buy it. Should I buy air? Buy it. Should I buy whatever? Buy it. Anything that you can buy, just buy it. Because it will appreciate in value. Because it's all been taking a nosedive. We haven't seen the true spike. This was one spike over here, but that was tariffs. We've yet to have it. And we're going into events that are going to lead to it, where investors will be looking to hedge. And they'll be hedging for a short period of time. Right? So if the NFP of non-farm payrolls comes in and shows that the labor market is dog, then we've got an economic slowdown. This is going to shoot up. Okay? On top of that, if we get information about the manufacturing sector showing a contraction, this is going to shoot up. Okay? There's problems. So then that means what happens is the market needs to price that in. When this shoots up, that's when you start paying attention to buying assets, because it doesn't stay up for long. It really doesn't. I'd be proud to strike drug factories. I'm not happy with Mexico. Oh, my days. And he's selling F-35s to Saudi Arabia. This guy's going on a bit of a warpath lately, isn't he? Beef with Venezuela. Now he knows where he stands with Mexico. He's going to be proud to strike drug factories, okay? Selling jets to Saudi Arabia. More healthcare costs in the coming weeks. This guy. Buy. No money. Treasury, why everything down today? Stocks, metal, B. I'll tell you why. It's because you've got data coming out. Simple. They've got no reason to buy. Well, not that there's no reason to buy, but what I'm saying is I actually believe that they're just preparing price. It's no different to a news announcement. That's all. How many times do we see FOMC prices then going up, and then we get the expectation of FOMC, and then everything comes down after FOMC, or it goes down before FOMC, and then it shoots up after FOMC. That's all this is. It's just rotation. Tito, tell us about the Fed injection of liquidity and its possible effects. Well, if the Fed does actually inject liquidity into the marketplace, then of course that can be seen as two things. Okay. First thing is has the Fed saturated liquidity in the market? Of course it has. Rates have been too high. Okay. If we look at the short-term overnight funding rate, you can see that has spiked up, and that's got investors and everyone really concerned. Like, oh my God, the Fed's going to inject lots of liquidity. Okay, cool. Well, let's start buying. Okay, cool. But your rates are still high. All right. If the fact that you're injecting liquidity means that there is a problem somewhere, what's the problem? And we're trying to identify it. Is it the labor market? Well, no, not really. Well, we haven't really had that many layoffs. I mean, Amazon wants to lay off around 600,000 workers. Once they get all the robots in, then fine. Okay, that's something in the future. Right. All right, cool. But economically speaking, do we really have a problem? Inflation is sustaining itself, but still sticky. All right. Interest rates have been cut. Well, okay, we can work with that because your economy has expanded with high interest rates. Expansion, contraction. Before the subprime mortgage crisis of 2007, 2008, the economy expanded 284 months. Look. We had wild expansion. Okay, I haven't got the data here. Right, actually, I've got it on the S&P. Hold on. Right there. So we had... wait. Yeah, we had crazy expansion all the way up from 1988 all the way up. Yes, from roughly around here. Yeah, from roughly around these ranges. So I'd say sub 2000 all the way up to around 2007, 2008. We had mad 234-month expansion, Okay? Lots of expansions, right? That's massive economic expansion, right? They need a contraction. Bang, there's your contraction. Then what happens? Then they expand even more. Then what do? They contract. Then what do? They expand. Then they contract. And they don't spend too much time contracting because money has to be made. They then go up. Then they expand again and contract again. But they spend literally, they spend all this time dropping. And then within 1, 2, 3, 4, 5, about 6 days later, they shifted back up, back onto it, expanded yet again. Then we contracted, consolidated, then we expanded again. Then we contracted, and then we expanded yet again. So it's all perspective, ladies and gentlemen. They say zoom out, but when you say zoom out, don't look at it in the context of it's trending upwards. Understand where you are in the market. Are you expanding economically? Have you been expanding economically? Are you going or are you pending a contraction? These are the things that you got to look for. What's been changed in monetary policy? Have we got interest rate cuts or not? Is money going to be cheaper in the future? What's the Japanese doing? Are they going to cut interest rates or what? Oh, are they going to increase interest rates? What are they going to do? Is the carry trade going to get unwinded? Does that mean the dollar strength is going to go up or is it going to go down? No, it's going to go down. Why? Because they're going to get rid of stock and then go into dollars, get those dollars back into yen so it doesn't cost them too much money holding the money they borrowed previously at low rates on yen. So when someone says zoom out, they're telling you just to look at a chart. What's that zoom out telling you? It tells you your economy is expanding in waves. There is your first wave right here. Look, there's a wave that they made an expansion from. This drop, and then they expanded out. Here's another one. There's your little wave there, okay? And then they expanded out. We drew another one. Come on. I'm not giving you hopium here. I'm giving you logic, market history, logic. Yeah, did we just see this one? There you go. There was a contraction. Fine. Expand out. There's a contraction. Why? They expanded out. Look, guys, that was 2018. Do you know what that was? That was when the bank's unrealized losses and gains was declared. And you would not believe at how much it was. It was disgusting. It was for $250 billion. And the market crashed. To date, the current unrealized banks and losses, gains and losses, is coming in at 586 billion. Market doesn't give a shit, bro. It doesn't. That's another factor that's coming into play. This is why it's so important for tech to keep sustaining itself. And the reason being is simple. I've said this before. The majority of the debt, or should I say, all the unrealized gains and losses that banks currently have, okay, are made up of assets that are deemed as BBB rated credit, okay, or risk, right? It's a credit rating. How good are these assets to hold, okay? They are BBB. That means in all of those unrealized gains and losses, 64% of them are made up of tech that are BB rated. That's it. Nvidia's in there with the BBB. That means when things are all good in the economy and everything's okay, those stocks tend to do well. But if something breaks or something changes that compromises the economy, then those stocks don't do bloody well. They have a big risk of flopping. Now, if 64% of those portfolios in the unrealized gains and losses for banks, given that it's sat at $580 billion, okay, and the market hasn't crashed on that declaration of those losses, and then we get the refinancing of corporate debt. I mean, I forgot about the $37 trillion worth of debt that the US has, and the more cuts that Donald Trump wants to do, which is going to impact inflation. And then you got stubborn FOMC members who are like, we don't know if we should be cutting or not. I think we should slow down. Here we go. Look, there it is. Where is it? There we are. A day later, the September jobs report will be released after it was delayed due to the government shutdown. Fed Vice Chair Philip Jefferson said he sees risks to the labor market as skewed to the downside, but warned policymakers need to proceed slowly. Okay, so we got interest rates higher than normal, higher for longer. Where's the bond market? Do we see bonds going up? Yay, of course we do. Trading positive 0.15. Okay, the yields are going down, but the NASDAQ's going down. Huh? Wait a second, the yields are down? Why is the yield down? 5 years down, 10 years down, 30 years down. Why are they down? Doesn't that mean the stock market should be moving up if the yields are down? Because the expectation of interest rates in the future is going to be what? Lower? Of course it does. Yeah. So what's going on? They're scared. Because if the bonds are going up and the stock market's going down, investors are seeking low risk. And you've got to try and find that in your day-to-day trading. What's this? Oh, here we go. Here we go. Fed Waller. I support a quarter percentage point rate cut at the Fed's meeting 9th and 10th of December. I'm telling you now. Waller, right, Waller was one of the most hawkish members. All of a sudden now he wants cuts. He says, I'm quoting it out. Here we go. It says here, a December rate cut will provide additional insurance on the labor market, right? So in other words, if they do cut, then it's going to take away pressure of people or companies having to lay off so many people because the cost of doing business might be cheaper. Okay, cool. And I worry that restrictive monetary policy is weighing on the economy. Okay, we know that. The US labor market is weak and is near stall speed. That's good. Underlying US inflation is close to 2% target, but it's not at 2. Hold on. That must mean that with the next CPI reading is going to come in lower, because it says it's close to the 2% target. Inflation expectations are well anchored, and tariffs are a one-time price level shock. I don't see any factors that would cause acceleration in inflation. Oh, that's good news. US GDP growth has slowed in the second half of 2025. Well, I'm sorry, but we should be in a recession. The affordability of housing and cars poses on ongoing challenges for consumers, weighing on spending growth. Okay, then, so the affordability of housing, people aren't putting money to work, and that means banks ain't going to be offering out loans, even though the rates are going down. So that means you should be starting to short bank stocks, even though interest rates are coming down. That means people aren't going to get triggered to start using financial products that are being offered by banks. Wealth of data paints an actionable picture of the economy despite a delay in official data. Never mind. Sour consumer sentiment lines up with reports from firms of slackening demand. And it's unlikely that any data, including the up-and-coming jobs report, would change the view that another rate cut is in order. Wait a second. It is unlikely that any data, including the up-and-coming jobs report, would change the view that another rate cut is in order. It's unlikely jobs report would change the view that another rate cut is in order. It's not what he's trying to say. It's how is the market going to translate that? In other words, when the data is released, I think we're going to be in for a surprise. I really think we could be in for a surprise. This happened last time. They have never been right with the data on the jobs market. They haven't. They haven't been right. They've all expected it to be crap. It's been terrible. It's been bad. Then a wild figure comes in, shows that everything's good. And if it does come in soft and it comes in line to justify a rate cut, in my opinion, the data's cooked. It has to be manipulated. Easy. Must be. The guys on the news said we are in a recession. It shocked the Fox News anchor into a minute of silence. We technically will know on Thursday if we are going into a recession. But look, like I said earlier on, the beverage curve, okay? We don't really have any problems with that until we start seeing the unemployed people, number of unemployed individuals, okay, starts to succeed more than what the actual number of job openings is available to, all right? If we see expansion, then we've got ourselves a bit of a recession. Let me just reset the zoom. Here we go. Look, can you see this? Can you see how all these dark lines here, when there is an expansion of the jobs of people unemployed against the jobs that are being offered, look at this gray thing. You see it? It's gray. That's recession, okay? That's recession. That's a recession. This is a recession. Look at right, we're doing it like this. We are doing it like this just to show you. What time are we on? 28. Shoot. All right. Here we go. Wait there. Just to put it into perspective, ladies and gents, so that you understand exactly what we're dealing with. Okay. All right, look at this. All right. This area here is a recession, right? All these gray things here are recessions. Now, zoom out. Zoom out. And look at the time difference between how each recession appears. Right, so you've got this one down here, which was in the 80s, okay? The next one was done in the 90s. The next one was done in the 2000s. The next one was done in just before 2010, all right? Every 10 years, yeah? We had a stupid one when it was 2020, but that was COVID, all right? But the economy was doing fine at that point because the number of unemployed people was lower than what the job availability was. So in other words, people were just lazy. In other words, things were all good, okay? But then all of a sudden, COVID came and then bang, all these people became unemployed. Oh my God, we're in a recession. And because it was so small, because they recovered it straight away and they injected a lot of liquidity into the marketplace, happy days, everything went back to normal. Everyone went back to work. Look at all these jobs. Look how amazing it is. Look at these beautiful jobs. And look, no one's unemployed because they were sick and tired of staying at home all day. So they all ended up going out and working. Now, we've got a little bit of an issue because it looks like the unemployed thing here is starting to edge upwards. And we've not really had a recession. So Well, we've got another 5 more. Technically, we've got another 5 more years for another recession. Really? Because if the last one was in 2020, we've got to wait till 2030 for a recession. Yeah? That would only make sense. So I actually think that the jobs market, it might actually come in good and then justify a reason for them to not cut the rates. I actually think it might be good. It might be good. Yeah, I was not confused by the English. I wasn't. I'm thinking about how is the market going to translate that? So I'm reading it out loud, thinking it's unlikely that any data, including the jobs report, would change the view that another rate cut is in order. Okay, yeah, we get the idea of what he said, but I'm thinking about, hold on, he wants to see a rate cut, but only 25 basis points. He supports that, but it's just one dude, right? So he implies that the data might be a little bit soft, but I don't think it's going to be soft. I think it's going to read a good reading. I just think it will. You've got so many business partnerships, so many expansions coming into play, especially with AI. Construction. What are they building all over the place? Flipping hell. Tino's losing his insanity harder than time with these late night lives. Yes, this is true. Jonathan Stephen Harris, wake me up when it's at 74. Okay, then. Quantum stocks was a good hype. Nah, quantum stocks is not hype. No, quantum stocks is not hype. I'm sorry. Yeah, Trump's going to be speaking in a bit. Can you comment on some options data for Bitcoin? I haven't got any options data for Bitcoin. However, we should have something here. Have I got any options data here? No, don't have it. I haven't got my charts up. I don't have my deribit order flow up. This is open interest, but it's not really the expectation that I want. This is liquidation delta. See where we are. Not looking great, bruv. These guys have been squeezed horribly. Bitcoin 9165 AI is actually horrible. I don't know, but something's telling me that the jobs market is going to be good. The data is going to be good. But with regards to Bitcoin, a lot of you are going to be asking, is it now time to buy? I'm being frank with you. I believe it's going to come down and fully recover this vector, but I do believe we're going to see reversals only off the back of news announcements, and then we're going to go into a consolidation, and then the start of next week should put things into perspective because we still need to get October's data for non-farm. So looking at the way the calendar is, yeah, we've got a little bit of a while. Yeah, we've got 2 weeks before the non-farm payrolls comes out on the 6th, well, fundamentally on the 5th of December next month, because that's when it should be. It's always on the first Friday of every new month, okay? So that's something that you've got to take into consideration, all right? Are we good with that? Why is everything so quiet about the trade deals with China? Well, apparently Besant said that we are coming to an agreement with minerals, all right? So that's all good. So should we short Bitcoin or Ethereum or Sol? Oh, excellent. Thank you for that. But look, that is the question. Should you be shorting? Quite frankly, you're going to be shorting, but only for a short period of time. All right. And it's a bit hard going short right now because you are shorting into strength. And when I say that, I'm talking about, let's go to the charts. Look, I'm talking about the buying that's happening right now on Bitcoin. All right. You are shorting into this cluster of buys. Look at these buys. So the buys, here we go. We've got a bid order of 19 million. That was only 49% transacted at 92,000. And then you had 4.84 million transacted at 92,215. 85 flipping million dollars was transacted at 93,500. Okay. And then you go up again, and then you go and see that we got another, where was it? 94. I don't really see too much there. Yeah, you've just got too much buying here. It's actually 70 million, 10 million. Yeah, it's all there, ladies and gentlemen. You've got buyers stepping in. So that means that there's going to be a potential reversal, which is going to shake out every Tom, Dick, and Harry because everything is taking a nosedive to the downside, with the exception of this stupid asset that's not done anything. Again, it's not even taken the wick. It's going to eat this wick, and it's going to be a violation, complete violation. This stupid asset. Anyways, BNB coming into a very interesting story. We were talking about BNB last week. So, yeah, very important thing. I'm expected to come back into this range of the 1,100s region itself. Dominance seems to be holding out. We've got a wick over here. I expect dominance to come into play again. Looking for 63.48. Some of you will just challenge me like crazy on that, but never mind. Someone was like, it will never go beyond 60 again. It will never go beyond 61. And in the day, 3-4 days after, it went to 63.48. So never mind us. Whatever, man. That's what I mean when people say it can never do, it can never do. Yes, it flipping can. All right. Bitcoin can go down, and Bitcoin can continue to go down. All right. Until it gets to the point when everyone is satisfied that it's at the price that they are happy to pay for it. That's it. That's your Bitcoin weekly. Look at it. It's broken the 50 EMA. You got a blue vector candle. This is why this is a problem. It's the last bounce from the chart. So if the news on Nvidia is bad, Bitcoin is down. If the jobs data is good, the interest rates won't get cut. The assets market will go down. And when it goes down, after all that information, they would have priced it all in. That only means what? It's now it's time to reaccumulate, and then we start riding the move back up again. 80,000 could be on the cards, ladies and gentlemen. This is what I'm saying. We need to see a strong reversal from Bitcoin this week. So don't buy it today. Wait. You've got Thursday. Because Thursday is going to tell you if we are going to get a rate cut or not. If you get a rate cut, then money's going to be cheaper. You'll be buying in line with the idea of money being cheap. So you are improving the odds of it working at least in your favor from a macroeconomic perspective. And then you use price action itself to justify your entry and say, okay, it looks like it's going to go back up now. Take the trade. All right. When does XRP dominance get to 8? Tell him like my mum tells me how. Oh, okay, then. Never mind. All right. With that being said, ladies and gentlemen, we got lots of work to do tonight. We're going to be doing the market watch. So I'm going to get that sorted out. And yeah. With that being said, stay safe. All right. Buy the drip. And I'll tune into you all tomorrow. Take care of yourselves, gang. Peace.